Mr. Speaker. Here to explain the amendment is my good friend from the Commonwealth of Kentucky, Congressman Andy Barr, and I yield him as much time as he may consume.
The gentleman from Kentucky is recognized.
Thank you, and I thank my friend from Pennsylvania, the gentleman from Pennsylvania, for yielding. And I rise to oppose the previous question so that we can immediately consider Representative French Hill's H.R. 8589 to prohibit the Securities and Exchange Commission from trading its independence and statutory authority away in the name of alarmist climate advocacy. The proposed climate change rule from the Securities and Exchange Commission will further crush our fragile economy, and struggling families will ultimately pay the price. Mr. Speaker, yesterday, the Bureau of Labor Statistics released the Consumer Price Index numbers for the month of August. As has been mentioned already today, CPI surged to 8.3% above projections, still a 40-year high, showing that this inflation crisis is not going away anytime soon. Americans are paying more for everything, and rising prices continue to wreak havoc on farmers, middle-class families, and small businesses struggling to stay afloat all across America. Of course, Democrats' overspending last year and the last year and a half has produced excess demand, pushing up prices. But no amount of Fed tightening can fix the inflationary supply-demand mismatch without also addressing the supply side. And at the heart of this inflation crisis is the Biden administration's war on American energy production. This policy of deliberately constraining the supply of energy is taking its toll on the American people. According to a Penn Wharton study, inflation has now reduced the purchasing power of American households by approximately $6,000 last year. That's like taking an entire paycheck away for an entire month for every American household. Real earnings, hourly earnings, dropped 2.8% over the year in August. Wages are down because of this inflation crisis. Credit card debt is up. It hit an all-time high last month. 1 in 6 American households are now behind paying their electricity bills and in danger of losing their utility services altogether, with natural gas prices up 30% since last July. And effectively, electricity prices are now up 15%, a 14-year high. When Joe Biden took office, the average price of gasoline was $2.36 per gallon. Today, the average gas price in America is $3.72 per gallon. And stubbornly, diesel prices are much, much higher. And that goes into everything, in transportation, manufacturing, farmers, having to fill up the tank on their tractor. All of that is passed on at the retail point of sale. In less than 2 years, America has gone from energy dominant to energy desperate. And Mr. Speaker, ground zero for the Biden administration's war on American energy is the weaponization of financial regulation and the politicization of access to capital. What do I mean by this? We all know that the Biden administration killed the Keystone XL pipeline and other critical energy infrastructure projects. We know that they're frustrating the construction of new refineries. We know that they've held up 4,400 drilling permits. But ground zero is the weaponization of financial regulation to deny American energy the access to the capital that they need to invest in a very capital-intensive business. Throughout the executive branch, at the Treasury Department, at the Securities and Exchange Commission, the Federal Reserve, the OCC, and other financial regulators, Biden has installed or nominated unelected climate alarmists and given them free rein to attack American energy businesses. And all in the name of climate change. And the sad irony, Mr. Speaker, is that if we want to innovate and we want to actually solve climate change, we wouldn't be denying American energy companies and the scientists there access to financing. We would be giving them more financing to innovate and to solve the problem the American way, through free enterprise and innovation. One of these radical nominees even called for bankrupting American fossil fuel companies. Perhaps the most dangerous regulation issued by the Biden administration to destroy American energy is the SEC's climate risk disclosure rule proposed in March. This 534-page monstrosity marks the transformation of the SEC from an independent agency dedicated to investor protection to an unaccountable and politicized bureaucracy intent on advancing radical environmental and social policy over which it has neither expertise nor jurisdiction. This proposed rule is totally disconnected from the long-standing investor-driven materiality standard and will politicize the agency and reduce its credibility by hurting investors, elevating non-pecuniary factors above financial returns, steering retail investors into lower-performing, higher-fee, and less diversified ESG investments. As a reminder, Mr. Speaker, the statutory mission of the SEC is to protect investors, maintain fair, orderly, and efficient markets, and to facilitate capital formation. Well, this is not about protecting investors. It's about hurting investors. And it's not about capital formation. It's about capital destruction. It is definitively not to reduce carbon emissions or solve climate change. But the SEC is wading into environmental policy debates like climate change with its top-down, government-directed, one-size-fits-all mandatory environmental, social, and governance disclosure regulation, or ESG. SEC Chair Gary Gensler claims that the requirements in the proposal are material because institutional investors are demanding this information. But according to a study conducted by the University of Chicago and FINRA, only 21% of surveyed retail investors in this country even knew what ESG stands for. The fact of the matter is, retail investors are not demanding this information. They want returns, not politics, guiding their retirement and college savings. What do retail investors really care about? Well, yesterday's bloodbath in the stock market when the Dow plummeted by over 1,000 points in a single day, the worst drop since June of 2020, that tells me what investors actually want, Mr. Speaker, and it's returns. They need returns. They don't need an inflationary environment that's eating away their purchasing power and rising interest rates because of it that results in turmoil in the financial markets, destroying retirement savings. ESG funds are hurting American investors. They are tech-heavy, and in a market where tech stocks are in a massive sell-off and are vastly underperforming non-ESG funds that contain investments in energy, who are the losers? Retail investors who are unwittingly invested and overexposed to ESG. On top of that, ESG funds charge 43% higher fees than non-ESG funds. In short, the government is redirecting capital away from energy, and it is costing retail investors, which include teachers, police officers, and other ordinary Americans, saving for retirement, extraordinary amounts of money. But today, Congress can actually do something to protect investors. I'm leading the previous question that would amend the rule to immediately consider H.R. 8589, legislation offered by my friend Mr. Hill from Arkansas to stop this SEC rule in its tracks before it causes more damage to retail investors and to Americans struggling to keep up with unsustainable energy prices. House Republicans will keep pushing for America to get back to basics, Mr. Speaker. We need to deliver economic relief to the American people to alleviate the pain of inflation. And to do that, we need to unleash the supply side. That means more, not less, financing of American energy to lower the price at the pump, to reduce the cost of heating your home. And yes, Mr. Speaker, we need financial advisors to get back to the basics of investing. That means diversified portfolios that include American energy, not just tech. And because the point of investing your hard-earned money isn't to further a political agenda or some far-left view of America that some woke asset manager on Wall Street thinks. Instead, it is to generate a financial return that will enable you to send your kid to college, ensure you can live a comfortable life in retirement, or pursue some other aspect of your American dream. And yes, Mr. Speaker, it is about capital formation. It is about giving heroic American energy companies access to the capital and the financing that they need, not only to make energy affordable and reliable for the American people, but to make America competitive in the global economy. It's for all of these reasons, Mr. Speaker, I urge my colleagues on the other side of the aisle to join me in supporting this previous question, and I yield to my friend from Pennsylvania.
Gentleman from Kentucky yields back. Gentleman from Pennsylvania.